The next trade, YY, is a different type of setup. We were talking about the setups where we are recognizing a point of entry somewhere in the original trading range in phases C and D, maybe early E phases where we have some kind of stepping stone trading range as a reaccumulation. But what about other setups where the price has traveled some time already and it has matured in the uptrend? And we kind of seen that this position was exactly about this idea. We are still very much in the uptrend, which is clearly defined by all of these points. And look how well respected both the demand line, support line, and the intermediate resistance line, and how these 2 points contain all of the price action and the deviation around the mean between these two lines. So as we come into this area right here, we're thinking about a long-term picture. That's number one. So that still has the bias to the upside. Short-term picture, which seems to be a short-term oversold picture after this reaction. But this reaction is actually very healthy. It's in line with all of the analogs that we have had before. The magnitude of all of the reactions are kind of the same, and these reactions come and touch the demand line, touch the support line, and the price reacts favorably. In a lot of cases, we have some kind of test in action after the first touch, test in action after the first touch. So our expectation is that after the first touch, we're gonna have a higher low test that's gonna have the characteristics of the higher low and further contraction of the supply. And that's exactly what's happening. So our point of entry was somewhere here. The pre-earnings run was not that impressive, but it really did not, have any type of confirmations where a short-term support would be broken like a bar like this. So this would actually get us out of the position before the earnings. And then the earnings day is actually very favorable. Unusual day for the earnings in terms of how much the price travels to the close, yet there is no significant gap on the open. So those type of earnings, small gaps and extension during the session are actually quite interesting. And I wish we would study this a little bit more. So obviously I'm staying through this whole day, enjoying the profits as they are being shown on my P&L throughout the day. And then this type of the momentum, short-term momentum that overcomes any of the points of the resistance, overshooting it, suggests that there's going to be a continuation, and most likely we are going to go to the area of the higher resistance. And this is probably reminds us more at the end of the long-term run, some kind of climactic action. It reminds us of the characteristics of the climactic run, increasing spread, some gaps, going into the overbought condition, touching the resistance line right here. And I think that, again, it's the exit that kind of defines a little bit of inefficiency for this trade. I thought that in retrospect that shortening of the thrust on still relatively high effort signature suggested that supply has been present, demand is contracting and diminishing on this second rally. So we should have closed the position much, much earlier, most likely somewhere here on this first red bar, or at least on the second red bar. And I think that I was just distracted with that. Yet it produces, a short-term favorable trade. We are definitely still profiting, and what's important is that we understand the structure and the intention behind our trade. We are not necessarily expecting the price to go higher significantly in the time period that we devote to this trade. We're thinking that the price has traveled significantly to the upside. It had all of the proper uptrend characteristics, and on a short-term basis, this is the conclusion of this run before maybe a more substantial stepping stone trading range, reaccumulation range, and it's there we would be looking the new point of the entry for the new position.